Welcome. Today we're going to be talking about basically microstructure. We're supposed to talk about psychology and risk management, but all of them are going to be, intertwined. And then I'm going to teach you virtually the remaining stuff all today. Okay, so just follow. There's no write-up on the screen, so I'm going to be making those things, on the screen. All right. First of all, we'll be talking about microstructure and macrostructure, just basically on a lighter note. If you want to really check it out, is on the YouTube channel, is there micro and macrostructure. You see it, I think, to details. If it's not clear, then you can contact me on this group. Anyway, I'm going to respond to you. All right. So I'm going to just talk about it in reference to entries, in reference to where your stop losses and take profits supposed to be. These things, people don't teach it in bootcamp, but I'm just going to just show you. There's no need. Just enjoy what we have on ground. So just try as much as possible to follow up. I'm going to show you, and then from there we'll cross to risk management, and then from there just touches on what do they call it, risk management, and then psychology. So if there's chance, we're going to find a day we'll talk about psychology, just like that. Okay, so just like that we'll talk about psychology. All right, so let's start with micro and macro structure. We've spoken about structure, so today we'll be talking about macro and micro structure. Okay, so no stress, just follow what I have to say. Yeah, these are terminologies, so don't feel like there are terminologies that I just decide to use. People can call it different name, but this is what I call it on my own hand. Okay, so there are a lot of names that people can give to it, but this is what I call it on my own hand. All right, so this is macro and micro structure. And as I've already taught you, all right, sorry, okay. All right, and as I've already taught you before, I've taught you structure. Okay, Mr. Eka, do you want to say something? Okay. All right. So all right. Okay. Welcome all. All right. As I've already explained before. Okay. Let me remove this line. Okay. So I've explained structure before. So I'm going to be drawing a daily structure. Okay. I'm going to be drawing any sketch I'm making now is going to be a daily sketch. Okay. D1. Okay. That's my basic time frame for determination of market trend. Okay, that's for me anyway. I use weekly also, I use monthly, but because TradingView doesn't have more than daily, so I'm going to just stick to the daily. So just using it to explain what I have to explain. Okay, so let's make a sketch on daily. Okay, so daily, we have an uptrend, assuming we have an uptrend like this on daily. So we have this uptrend, so price kept going. Okay, so we have this. So this is what basically we have. Okay, so let's not stress it. Let me not make it too rough so that I will be able to explain what I want to explain. Okay, so like I said before, I told you always, first of all, try as much as possible to mark your, okay, try as much as possible to mark your range highs and lows, blah, 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 blah. So just let's try to do that. So this is my range high on daily. All right. So this is my range low on daily. Same thing goes for any time frame. Do the same for any time frame. Okay. So just do this. Let's see how it unfolds gradually. Okay. So now this is another range high. And this is the range low. Don't make it complicated than it is. Okay, so this is the range low. All right, so this is another range low. Yeah, it's close, but this is another range low. So let me adjust this. Okay, so that all right, so I adjusted that. All right, so this is another range low. So we have another range high here, and like that. So price kept going. As soon as price break above that, then we call it a new range. All right, so this is our macro structure, basic, okay? So higher time frame structure is what I call macro structure, okay? So your range high is basically marked, okay? So you use this for macro structure. All right, so this is what we have as macro structure. All right, the lower time frame structure is what I call macro structure. All right, so if I'm using daily, okay, okay, let me find a better way to explain this. All right, let me use an horizontal line. Okay, let me use an horizontal line to mark my range highs. Okay, I'm using black horizontal line to mark the range highs. Okay, on daily. Please follow closely, all right? Just follow closely, no stress. Oh. Okay, so my range highs are denoted by those black lines, all right? So let me divide this. Okay, and then my red line will show the range lows. My red lines will denote the range lows. Okay, let me. All right, so let's go. So every red line you see here is a range low. Okay, so those are the range highs and lows. All right, so since the way I use my time frame, I check from daily to H1 just to see what price is doing. So I'm going to be sketching H1, how price would look on H1. Okay, so that you would, when you look at these things, you'll be able to, catch them one after another. So this daily structure, very clean, nothing, no noise. All right, so when you look at H1, this is what you'll be having. Okay, so this is the first low. Having something like this. So this is what you'll be having on H1. So I'm just making the sketch. I might not be able to make everything, okay? All right, so just follow the sketch. So this is how rough H1 might look, okay? I might not be able to satisfy all what structure field have because of the screen. Okay, so this is what we have on H1. So let me just rush down here, yeah, here, and then rush back up here. All right, so this is what we have. All right, so this is how price looks on daily, and this is how price looks on H1. So we have our daily range high. All right, so yeah, we have our daily range high here. Let me type there so that you can be able to, understand what we are talking about when you watch. All right, so that's the daily range high. So I believe if you have been following the class for days now, you should have understood what I'm talking about. by now. Okay, so range high, I will just mark one of them and then you can decide to mark the rest. All right, so this is the range low. So range high, range low, range low, range high, range high, range low, range high, range low, range high. So this is what we have on daily. Now, when you look at H1, all these phases, all these are in phases. Okay, so we call this the impulsive phase, the one that is in line with the trend. They are always long, so that's why we call them impulsive, and they move very fast. They are long and they move very fast. So we call them impulsive phase. Price will just keep shooting, giving a lot of imbalances, IPA. It just keep moving. And then this is the retracement phase, the one that, you know, do a little bit backward. They're always slow, but they deliver sometimes. And then this is the impulsive phase, the retracement phase, impulsive phase, retracement phase, and then impulsive. So that's how price go. All right. So when you look at this, okay, as soon as this happened, now this leg alone cannot determine, okay, cannot determine if price is already in a buy trend, okay? So before we conclude that price is in a buy trend, we should have something like this. Okay, we should have something like this. All right, so we should have had something like this, okay? So something like that should have been, you know, more appropriate. Okay, but that is not part of my sketch. Okay, that's not part, but I just want to show you that something like that would have been more appropriate. But from the sketch I made, this leg alone is not enough to determine the trend. You need another break of structure to confirm that price, okay, might want to start buying. All right, so when this happened, I waited for a retracement and then a break above. As soon as I see this break above, I know that, okay, price want to start buying. Okay, just a clue that price would love to buy. So now, like I said before, the first thing to do, I'm saying everything together. I'm bringing all the classes together now. All right, the first thing to do is to pick your Fibonacci and then measure from this swing low, which is the range low that just got created, to the new range high, which is around here. All right, so you measure that. As soon as you do that, you look for zones, you know, zones below 50%. When I was talking about premium and discount price level, so I use Fib to explain that. If you are okay, I don't know whether I've put that on YouTube, but if I've not, please remind me to do it. So all right, so let's assume that there's a zone here. I would have created a zone. Okay, let me see whether, okay, no, there was no zone. Okay, so there was no zone around there. Okay, so let's just leave that. All right, so let's assume that there's a zone around here that's below 50. All right, so everybody try as much as possible to follow me. Okay, so yeah, let's draw it to this length. All right, so we have another zone around here. Okay, so there's another zone around here. Okay, so those are the levels where we have zones. I don't know whether I can tick in or change the color. All right. Wow. Okay, so if I can't change the color that much, all right, just know that there's a rectangle here for a zone and there's another rectangle here for a zone. Okay, so all these zones are valid because they are below 50%. No stress, nothing. You just have to know that they are below 50%. So you delete your Fib. You've already verified those zones. All right, what you do is, since this is a daily zone and this is also a daily zone, so these zones were marked on daily. For you to get perfect idea or something close to perfect and not really perfect idea. Okay, let me draw this. Wow. Okay, sorry, I have to draw this to this place. Yeah. All right, so those are the zones. Now we have bypassed this. Okay, so this is not part of the phase we are considering. The next phase is what we are considering. Okay, so this is where we are looking at the next range highs and lows. All right, so now price is retracing. Okay, so this is what price is doing on daily. So candlestick kept printing, and on H1 you see what price is doing, creating these highs and lows. Highs, let me mark it so that you can also see it. Okay, so on H1 we have this low got violated. Okay, so this low got violated, sorry. All right, so we have this low also. So just like that, you see there's another low here. You just have to mark them. Let me just stop there so that we'll be able to proceed. All right, so now we have this low taken out, this one was taken out, and then price kept going. Now, since we already have an idea that price is going to buy, so we are looking for buy opportunities. All right, so this zone was the first zone we will be looking at. So we are waiting for our entry pattern. Entry pattern, I think it was discussed the other time. So when price got here, we were waiting for this high to be broken to confirm that, okay, price actually wants to start, we want to continue buying. Okay, so we are confirming as soon as this high get violated. But price didn't do that. You see, price came back a little bit, didn't break above, then go down. So now, as soon as price went down, all right, so you just keep marking your highs on lower time frame. Okay, so this is another high, and then this is another high. Since you already have a plan that you want to join the buy that is just coming, all right. So next thing you do is this place has been violated, and then boom, no need. I know most persons that enter aggressively, okay, yeah, they just put their entry here, and then boom, they got stopped out. All right, price still move down and then get to this zone below. Okay, now at this zone below, we know that if price breaks below this zone, then sell will just continue. Okay, no stress, you don't need to stress yourself. As soon as this low is broken, the range low is broken on daily. Okay, so price will continue selling. So you have to start looking for the same process over and over. Okay, so now as soon as price got to this zone, I saw a break above. So price actually broke this high and went above. Okay, so as soon as price went above, I will now go and pick a zone on that time frame, okay, or an imbalance. I know for those that trade IPA, you go to that lower time frame and then look for that zone on the lower time frame. You wait for price to come back into that zone and then you start buying. That's the first thing. All right, now let me show you what we would have done. All right, for those that entered aggressively, so let's use this tool. I think is position tools. So let's use this position tool. We want to take long, and then let's say you want to enter aggressively around here. Okay, now that's your zone. You pick all your zone, and your stop loss will be below that zone. Okay, so your stop loss will be below here, and then you drag it to this eye. So this eye will be your target, your targeted TP. All of it was explained. All right, on this kind of occasion, okay, this particular kind of occasion, your risk to reward is 1 to 8 or 1 to 9. So this is a 1 to 9 or 1 to 8.94 risk to reward. Okay, so that means if you are risking, I've crossed to risk management basically, so you can grab all of them together. So if you are risking $5 on this trade, then what's happening is multiply $5 by 8. That's what your reward will be. All right, so that's that if you are entering aggressively on higher time frame, which basically I don't often do. Okay, but sometimes I do that. Okay, but let's check if you are to enter on this lower time frame. This is what we are looking at. We are looking at this zone. Okay, our stop loss will be below that zone. Some people use the general, zone, but that's the way I trade. This is the way I trade. My stop loss will be below this zone here on this time frame. Okay, so that's where my stop loss will be. Okay, yeah, then I will now look at taking price to this high. All right, so price will be taken to this high. Okay, now let me shift it back down a bit. All right, and on this basis, okay, we are having 1 to 12. This is 1 to 12 and this is 1 to 8. So you have more reward and you risk less waiting for lower time frame confirmation. All of them are the same, but the only difference is that one of the risk is bigger than the other, and one of the reward is bigger than the other, depending on what you use. Even if you are using lower time frame, assuming that I think we are going to be calculating. I don't know whether I will calculate. I don't know whether I have calculator on this. Let me check whether, yeah, we should have calculator here. I think I've used it before. All right. Okay, we have calculator here. All right. So okay. All right. So we will be calculating a little bit around here. Okay. So but we have to go to live chart to do those calculations basically. All right. So now this is what we have. Now let's go and check. Let me zoom in a bit. If it will not change us. No, it will scatter the chart. So let's just okay. So what just happened? Sorry. Sorry, please. All right. Yeah, I believe you got the picture. I don't know. All right. So let's just see what we can do around here. All right. So this is what we're considering. Okay. So let's just continue. All right. So now what you're going to be doing next is measuring your stop losses. Okay. I wanted us to have. Okay. All right, I wanted us to be able to measure the stop loss. That's why I wanted to bold it up. But no, you see this ruler tool that my mouse is on? That is what we use to measure, okay? So let's measure that stop loss from this zone high to this low, okay? What? All right. So, okay, this is not working. Okay, let's get to the rechart first before we talk about anything. But this is what I'm trying to explain. I believe you get the picture now. So we're going to be talking about risk management later on, but that's when we get to the chart. All right. So any question before we go to the real chart? Okay. Is there any question? If you have any question, raise up your hands so that I can attend to it before we go to the real chart. Okay. All right. Okay. So if you understand to where I stop, can you put 111 in the chat box? 111 in the chat box, please. 111 in the chat box. All right. It's only one person. All right. Okay. One person. All right. That's good. Okay. So let me use this. All right. Okay, thank you all. Thank you all. Yeah. I've seen that. All right, let me just reload this. But yeah, if you get the picture well, then I don't think it should be hard looking at the chart. But I think people sometimes have issues, marking up the chart. So I'm just going to quickly go through it and then explain how I go through my chart. So let me use basically the asset I use more often. All right, so B500. All right. Okay. B500. All right, so this is B500. Amazing work. All right, the last class when we were talking, I remember marking this eye and I said, okay, so this eye should, take price down. But remember, this eye is now violated. Okay, so this eye has been taken out. So it has been taken out. So most of the persons now will be looking or will be of the opinion that price should buy more. All right, so price should buy more. All right, they are not wrong, they are actually correct, but we don't have weekly time frames here. Okay, so now, but let's just use what we have. All right, so this 24 hours, we have that violated. Now, one of the things I noticed was when I was going through the monthly, I think the monthly or so, yeah, I think the monthly, yeah, this place was a low on the monthly. Now, okay, so this was a low on the monthly. I remember teaching us about breaker block, okay, so I remember talking about breaker block, even if it is not extensively, I spoke about it little. So this low was the previous low on the monthly. Okay, you can go through your chart. I just hope I had. Okay, wait. I will. Let me look out for something. Okay. Wow, wow, wow. I used to see my screen. If you are seeing my screen, just drop 111 in the chat box, please. I want to check my what do they call it? MT5. Let me see whether it will display it. All right, okay, so that's good. So let me check my MT5. Let me see whether it's going to display what I want to show you so that you can be able to see monthly also on this call. Okay, so this was a monthly low. And like I said before, all these things are very important to me, especially when I'm trading crash and boom. So if you are trading VIX asset, you might not pay much attention to this, but if as I trade crash and boom, I pay attention to breaker block. I said it. I see, and then mitigation candles. That's other blocks also. So those are the things I look out for in the market. If it's not there, then I would love to ignore that. I won't stress myself looking for what is not there. So I saw this. Actually, early this morning, I wanted to post it, but I don't know. I wasn't like settled, so I didn't post it. But I will show you what happened, okay, so that you can also see it yourself. All right. Okay. Now, sorry, I want to be 500, right? Okay. All right. So it's been long I used this. Okay. So I'm trying to change template. Wow. I don't have any templates saved here. Okay, I have to find a way to change the background from black to whatever it is that someone can use comfortably. Okay, but I didn't see it. Okay, so let's just use the black background so that I'm still working on it. So please, all right, okay, all right, wow. Okay, so let me show you so that we can all see it. So that was what I saw. Anyway, I think I've closed partial on the trade, but I just want to show us what I saw before I took the trade. All right. So all right. So this is that's it. That's okay. Yeah. I believe you can see my screen. Can we see it well? How do I change this? If you know how to change this, can you just drop? I've changed it before. I can't remember how I did it. Okay. I don't know. All right. Okay, I just want to change the background so that we can be able to see it. So maybe later on I might be able to, okay, no, this is bad. Okay, maybe we'll be able to see this. Hi, no way. All right, I think this is better. Okay, yeah, so this is better. All right, thank you. Okay, so this is what I saw. I saw this place. All right, okay, so this is what I was telling us about. So this is what I saw. I saw this breaker block around here. That's exactly what I saw, and I wanted to take advantage of it, just even if it is for a while. So this is monthly last low, which was the breaker block I saw around here. All right. So what I was waiting for is that price should come into it and give me some sort of confirmation on any time frame you can talk about. So this is the range high on monthly. So that's the range high. So until that place is violated, the sell is still very much intact. Okay, so all right. So this is the range high here. All right, so that's what I see. So I was waiting for price to come to the breakout block and give me something. So let's go to H4 and see what price did. Okay. Okay, all right. So this is what price is doing on H4. But what I saw actually was on H1 coming. All right, so I saw this break of structure long time ago. I think I've seen it for a very long time. Yeah, around here. So I set my limit long time ago around my fib level, basically the same fib settings over and over. Okay, 88.6. Yeah, so that's what I set my limit there, and then price fill me in, and then since then it has been going. Now as soon as I set it, I didn't just stay there, because most persons will feel like if you set this, okay, can we see my screen? How do I change this one? All right, so that's it. So I just set my limit at 88.6. I wasn't really bothering myself, so I set my limit at 88.6 and price activated it to further confirm that price is going to sell there. So I wanted to be sure, like completely sure, that price was going to move from there. So I went to lower time frame. It's just the same thing over and over. So let me mark this. So that's the zone I was waiting for. So I think I went to M5 or M15 or so. I can't remember. All right. So I think it was this time frame, or M15 or so, M5. Yeah, I saw. Okay. Yeah, it's 5 minutes. All right. Yeah, it's 5 minutes. I saw this break of structure here. So as soon as I saw this, I just believed that it was actually going to sell. So I knew it was going to sell, wait for price to retrace, break the next low again, and then a retest. So that's when I enter. I can share the screenshot so that you can be able to see it. All right, so that's what I did. So as soon as this low was broken, hey, this markup here. All right, as soon as this low was broken, then I went in. Okay, broken and retest. So I went in around here. Let me use this line. So this is where I went in. Okay, so I was in from then, and I'm still in till now. Even with the retracement there, I took partial and I'm still in. So I'm still in this trade. I'm still selling. All right, but you don't need to stress yourself. So I just wanted to show you why I focused around there. I focused around there because I saw a break. So this is a breaker block. Price came into it. I was waiting for some sort of confirmation on time frames, and then I saw it and I took it. That's that on that. So let me go back to the trading view so that we can find something else to do on trading view. Okay. All right. Back to trading view. All right. Thank you. Okay, so that's what I saw exactly around there. So you have seen that low. So this is it exactly. And it has a lot of alignment around it. So I didn't really stress myself much. I have this zone also. So around that place, I have this zone. Okay. So I have this zone, a very good zone around that place. So it wasn't really stressful for me to decide. Okay. It wasn't stressful for me to actually decide. So no stress. So that's how I got into the trade. So just bear that in mind. All right. But this has been violated based on weekly, view, but it doesn't mean that, the trend has completely changed, because most persons feel, okay, as soon as the weekly breaks, the trend is completely changed. No, it just means that price is trying to gather internal liquidity as much as possible. We can go as far as gather the internal liquidity on monthly, or the internal liquidity. Wow, someone is raising up their hands. All right, sorry, Mr. Pactozin or something. You want to say something? Paxton Divine. Do you want to say something? All right. Okay, I was thinking maybe he can't hear me, so just that. All right. Except for that, please let me finish the class and then you ask your question. All right. Thank you. All right. So that's what I saw. Okay. So price had broken this high. Yeah. Good. Okay. So we are anticipating that price comes down a little bit lower. Now, how do we measure risk management? So let me quickly talk about, we've known structure, we've known how to mark zones. Basically, early this morning, I sent this. I say, okay, price might react from here. Okay, so price might react from here. What am I risking? Okay, this high was violated. This high was taken out. Okay, so this high was taken out. Then this low is also there. Okay, so now, okay, I'm coming. Oh, yeah. Okay, so this low was taken out, just some form of liquidity grab. So price came, cleared liquidity, and then still continue breaking price up. So there is an additional candle around here. So we are waiting for price to come into it. All right, so I'm waiting for price to come into this institutional candle, and let me see what price is going to give me. That's one of the reasons why I'm encouraged to even sell down. So I'm selling down into this zone to see what price would give to me. Okay, so how do I measure my risk? Okay, now the first thing you do is decide how much you are willing to risk. So that's the first thing. No matter what you do, no matter how experienced you are, no matter what you feel you've mastered about the market, you decide how many percentage of your account do you want to risk per trade. Okay, so per trade, how many percent of my account do I want to risk? Okay, so let's say you have a $100 account. Let me see that. So let's go to calculator. Let's make some calculations here so that we can be able to understand. I want you to see the calculation screen so that you will also be able to see what I'm saying. All right, so this is a calculator. So I have an $100 account. Okay, so I have an $100 account. So I have an $100 account. All right, based on this $100 account, I want to decide, okay, how much will I be risking per trade? Okay, so how much will I accept to lose and how much will I accept to gain? Okay, so those things are things you need to decide. All right, you have heard a lot of risk management counsels. Don't risk more than 5% of your account. Don't risk more than 2%. Don't risk more than 0.5%. Don't risk a lot of risk management stuff. Okay, so you have that, but the rest is left for you. You decide how much you want to risk in the market. Nobody can tell you what to do. You decide what you want to do yourself, depending on what your risk appetite is. I might decide that, okay, on this $100, I want to risk 5% of it. So that means if I'm risking 5% of this account, what you're just going to do is multiply this by 5. Now, that's multiply this by 5 and divide it by 100, which is exactly 5 naira. Okay, so sorry, $5. I'm communicating in my country's currency. All right, so we trade in dollars, or euro or anything, but that means you want to be risking $5 per trade. $5 per trade. And if you want to be doing that, basically there's a calculator already available for synthetic indices. You can go there. I think the link has been shared plenty times. I will also share it so that you can go there and test it. I've tested it and it's working very fine. You type your account balance, you type it there. You type the percentage you want to risk, you put it there. Then you type your stop loss and your entry, the difference, you put it there. And then it will help you calculate how many loss size you are supposed to use. So with a percentage, you don't have any problem. Okay, maybe I should even check whether I can do that. So let me check if I can do that. Okay, So let me check if I can do that. I used to have that. Okay, sorry, please, let me check so that I will just load the account. I will just load that online, and then we try as much as possible to show ourselves. Maybe it's foul. Can someone help me with it? Yeah, if you have the link, you should just help me with it. It was shared by Mr. Richard. Okay, I wanted us to see it. I don't use it often, so I didn't plan to use it in class today. Okay, so all right, so there's something, there's a site or a calculator for this thing. Okay, there's a calculator for it. They've made a calculator for it, and then okay, sorry, that I know where it is. Okay, yeah, okay, it's just a site, and then all right, let me share it. Yeah, so that's the site. Okay, it has been shared. All right, so let's quickly check whether we can have that. I don't want to use Mozilla. All right, so all right, let me. I want to use Chrome to do that. Okay. All right. Okay. So let me share the screen instead of using this calculator. So let's quickly go through it. Very easy. Everything is now very easy for everybody. Instead of you stressing yourself, just go to the calculator and then see what the calculator has to offer you. Okay. I'm coming. All right. So okay, so this is the calculator. Yeah. So this is the calculator. The site has been shared. All right. So you have your entry price, your stop loss price, your account balance, your percentage, risk, and then boom, the calculator will do the rest for you, give you lot size and every other thing. So let's try it out. All right, let's go to the chart. You at this time there was no stress anymore. You don't have any stress, nothing. You are not stressed anymore. So everything has already been done. So you just come to the chart and then just make your analysis and proceed. All right. So you want to be risking 5% of your account. You want to risk 5% of $100. So now let's say you want to enter around here. Around here, that's your entry. So you set your entry there. All right. And your stop loss is here below the zone. So around here. So that's your stop loss. Let me delete this. All right. So that's your entry and this is your stop loss. So let me mark it so that you can be able to entry. You want to buy. Okay. So you want to buy. You are looking for buy entry. So your entry is there. Yeah. And then your stop is below. Okay. So this is your entry. Your stop is here. Your XL is below here. All right. So this SL. Now what you do is, okay, first of all, you have a lot of tools here. You can use this to measure it. Okay. How many risk to reward is this? So here is your stop loss and this is your take profit. Okay. So that's where your take profit would have been. So this is 1:3 risk to reward ratio. All right. So that's done. That's done. Okay. Now we are going to input into that calculator our entry price. So okay, so what is the value for this line, this horizontal line? We have 3581. Yeah, I'm coming. 3581343944. All right, so that is your entry. You input that into the calculator. 3581.39. So no stress. 359. 3589.39. Okay, so no stress. 3589.39. Okay, so that's the entry. So where's our stop loss? Okay, where's our stop loss? Our stop loss is 3502. Okay, so we have 3502. All right, 3502.29. So 3502.29. So 3502.39. I just want to show you how it works. There's no, so how much is in your account? You have $100 account. How many percent are you looking at risking? 5%. All right, so you just press calculate. All right, that's giving you your loss size. So if you want to risk this 5%, that's $5, you are supposed to use 0.057 loss size. And on boom and crash, there's nothing like that. So you should know that this, if you enter this trade with minimum loss size on boom and crash with 0.2, okay, so let's say you want to enter with 0.2, that means you'll be risking too much of your account. Let's say, let me check how many percent that will be. Okay, so let me see, 50%. You see, you'll be risking, sorry, not up to 50, 25. All right, so you'll be risking something like 20 to 25% of your account, which is, yeah, 2018, something like that, 15%. All right, so around 20, between 15 to 20% of your account, that's what you'll be risking. Not to now talk of you are trading against spike. If you trade against spike, oh, I will cut cap for you, is a serious suicide. Okay, so that account might just have already been sacrificed or so, except you are trading a flip account. If you are trading a real account, then it should have a specific percentage risk. Okay, so what will be reasonable is find a way to reduce your stop loss and entry, which means that around this place you can go to lower time frames. Okay, you can go to lower time frame and wait for something like this. So let me mark it out. So wait for something like this around this zone on lower time frame. All right, so wait for something like this. As soon as that place broke to the upside, you are waiting for a retest of a zone around here, and that might be just good for you. Okay, so forget about this higher time frame. I'm still using 24 hours. This will still be large, but it has reduced your risk. So what your risk will now be is around this zone, then your stop loss will be around here. All right, so that's what we have. So now you can now shift your entry to this place. Then your stop loss can also come up a little bit just for the sake of risk management. So this comes down into this place and then you start buying. So now we can use this somehow to calculate. So let's say we are entering at 3537. Okay, so sorry, 3537, 3537. Okay, so that's when we are entering. That's the time we are entering. All right, so where's the stop loss? 3510. Okay, 3510 is the stop loss. All right, 3510. So that's the benefit of considering lower time frame stuff. Okay, so now you are risking 5% of your account. So let's calculate what we use. So now this is also well above the 0.2 lot size. So the fact is, you have to be able to calculate this, find your entry. If it's more than your risk appetite, oh boy, start looking for how you will be able to get the taste of your risk appetite. It's not hard. Just try as much as possible to refine your zones till you can get, oh, sorry, I'm using, even boom and crash self is the same thing. I'm using VIX 10X, wow. So we are using B500, okay? So B500, sorry. It's still the same thing on all of them. So this is 0.18, which is well above. So try as much as possible to find your risk. All right, let me show you something and how much I would have risked. So let's go down. Let me show you how I took this trade and how it started playing, okay? All right, so I took this trade around here. I think I showed us. Okay, so I showed us, I said, as soon as this low got broken, I will share it. I will still share it. As soon as this low got broken, I took this trade as soon as price gets here. So price came back into this place. Then I took my price. So I took the sell, okay, around here. So instead of using the whole, what do they call it? The whole zone, you see, the whole zone around here, which is still very wide. I didn't use the whole zone. Let me go back to each one so that you can be able to see it. All right. So I am looking for an entry that will align with my risk appetite. So I'm not really stressing or overstressing myself. I'm just looking for entries that are going to, give me the risk appetite I'm looking for. So instead of using this O zone, this place around here, I was just waiting around all these zones to wait for 5 minutes break of structure and then a retest so I can go down. So that was all I did. Now let's calculate the risk. Since we are talking about risk management, let's see what we got. All right, so as soon as price I entered around here, let me use this tool to measure, okay? It's just for those that are just, new to Forex trading or trading view, just try as much as possible to follow us, okay? Now, so that's where I pick my entry from. Yeah, I think around there. So from here to here, I already have my 1 to 3, okay? So this is my 1 to 3. Risk appetite served, okay? This will give me 1 to 3 comfortably. This 1 to 4. I'm okay. All right. So let's talk about how many pips it is from here to the upper part. Okay, to the upper part. So let's use our horizontal lines. So I'm entering around here, and then my stop loss is above here. All right. So this is where my stop loss was, around here. I added few pips. Yeah. So that's where my stop loss was. All right. So my entry point is 3842. All right, so you enter it. Your entry is 3842. You want to sell 3842, 3842. Okay, then your stop loss is 3846. Okay, so 3846, 3846. Then the same stuff. All right, so now you can use one lot. 1.25 lot. Very simple. You can use 1.25 lot and it will not exceed $5, except that you are trading against the spike. If you are trading against the spike, it will always eat more than your risk, but it will still be minimal, especially when you are trading B300 or B500. They are a little bit less volatile, so it's okay. But if you are trading C1000, B1000, C300, C500, you have to be very, very careful. So that is how to calculate. This is already made easy. You just have to follow this process. You're going to get it. And according to what I have had today, so this was where price was. I still close partial anyway. I've gotten 1 to 24. Okay, so I've gotten 1 to 24 and price is still going down. So let me show you where I was looking at taking, at least if I would stop trading this, that's if I want to close completely all this trade. I was looking at coming down to this place, well, around this place anyway, which is about 1 to 43. Okay, so this is about 1 to 43 that I'm looking at, but for certain reasons, okay, I'm coming. No, it's even more than this. Okay, this is where I was looking at taking my first TP. Okay, final TP, sorry. So I'm looking at 1 to 50, but I can still extend it downward to this place, which is going to be about 1 to 117. So it's going to be about 1 to 117 going down. But you have to be very realistic. You don't, since you are not the one that runs the market, you need to, think very fast. Your 1 to 3 has already been achieved. There's no stress. Close partial, allow the rest to run to wherever it wants to run to. So currently now, the remaining positions can run to wherever it wants to run to. Okay, but I'm already at break even. And I'm also, a profit in the pocket. So that's how to follow the market. Okay, so don't stress yourself. Just do this and then you'll be fine. But risk management, you have to define what you want to risk. Okay, you have to sit down and decide, okay, I will risk 10% of my account. Then you can use the calculator to do the rest for you. For me, I use limit execution. Some persons use instant execution, but I use sell limit and buy limit. So that's what I use to take trades. So it's very fast. I've calculated what I'm risking. I've set my limit there if it's comfortable for me. So I just find something else to do. So all these things are there. Okay, so just try as much as possible to follow them. And this can also continue going down. There are a lot of possibilities in the market. Your own is enter the market, look for a 1 to 3, be happy with it, and then allow the rest run. Some of us might be guilty of just holding price too long. Yes, I'm a swing trader, but some of us might be very guilty of holding a position for a very long time. Now, the reason why we personally hold positions for a very long time is that we have already secured the profit we are looking at. We just want additional income. So that's why basically when it has 1 to 3 and I'm feeling like, okay, this might not, so I just take my 1 to 3 and allow the rest run. But if you don't have big capital, always try as much as possible to take something off the market. Yeah. But sometimes you can also be a victim, but just know that this is the basic way to manage your risk. Wait for lower time frame entry and you are superb to go. So what I would have used 0.1 to buy with this ozone, I've used 1.2 something to buy it if I'm risking 5% of my account on this. So that's just how it is. So try as much as possible to look out for lower time frame model, the model that you were taught during the bootcamp day 2. Go through the model, use it over and over. That's what I use. That's what I believe most of the smart money traders, that's what they use. So try as much as possible to go through it and then use it. All right. I think I've done basically all that is stipulated for today. Okay, so if you have any question, you can basically ask. I'll go through it and then we'll be fine. Okay, so if you have any question, you can ask.